Multifamily REITs are on the rise today as the 10-year dips below 4%. My next guest knows a thing or two about that. He's developed over 170 properties in the past 3 decades, totaling more than $11 billion in real estate assets. For more, let's bring in Kevin Maloney. He's Property Markets Group CEO. Kevin, it's good to have you here. Thanks for joining us.
No, thank you for having me. I appreciate it.
I don't know if you just heard that chat we were having about the New York market in particular, where it seems like there's been some demand softness.
Yeah, so I'll tell you that in the rental market specifically, I have a couple of projects going up in the New York area. We're actually seeing pretty much the opposite of that. Maybe there will be some softness, but you might be aware that the New York State recently curtailed their 421A program. You actually cannot launch a rental in the New York City corridor without having a 421A tax abatement. So the supply side of the equation has completely stopped. This happened 5 years ago as well, and we saw a surge in rents.
And just remind us what that tax abatement does and why it went away. As quickly as you can.
No, you can. Absolutely. It's a 35-year real estate tax abatement. Taxes might be $20 a square foot, and the cost of building housing, with all housing requires an affordable component in New York City. It would be impossible based on the cost and the rent structure to launch one and to build one, especially in today's environment. But even with where cap rates and interest rates were at 3%, it was not a feasible project. So for decades, many decades, the state had used what they call a 421A program, which allowed you to have a 30-year tax abatement on your real estate taxes while you were in this particular program. Which made them viable. That they have now sunset that program. So if you were not really out of the ground in the last probably 6 or 8 months, the supply of any even market rate or affordable housing has just come to an end.
That's really interesting. So, I haven't been keeping up with my New York Post reading. Clearly,
you'd have to speak to the legislator up in New York, up in Albany, but no question, it's going to. Probably in their wisdom, they felt there was just too much being given away, and but the result is the supply side is really just there will be no new housing created.
So you think, or I don't want to put words into your mouth, but it's pretty obvious if there is a stall in new supply coming online, maybe that will put more upward pressure on rents in that market. But you have exposure in a lot of different markets. What would you say is going on with the consumer, with rent patterns? What are we're showing some of these markets. What are you experiencing?
So with cheap money, a lot of markets got overbuilt, and that is always part of the cycle. And then of course the Fed. I know we're looking at SOFR at 18 bips 18 months ago, and SOFR is 530 today. Last time I looked, or somewhere around there. I mean, you're talking a 30x increase in a historical short period of time. That really put the brakes on all. I don't know anyone who could really get, based on supply chain cost increases, inflation during COVID. I don't know that with capital markets where they are today, you could really launch a rental that made sense anywhere in the United States. So, but saying that, a lot of markets were seriously overbuilt. Cheap money, a lot of people entered those markets. A lot of units were creating, a lot of housing, and you're going to see softening until that is absorbed and stabilized, and then from there you can probably start to see some rent increases.